I'm going to put it on you now, Steve. So we've gone through your board, but we know the competing interests of the new RBA governor-elect, Nehru, 4.5% unemployment. What do you think she's going to do? What do you think? No, not her, but what do you think they are going to do in the next meeting?
I think they're on hold. I think, and when we sort of go through the wording of each statement, the minutes that they put out 2 weeks after each board meeting, the last few meetings, some which they've paused, some which they actually have hiked 25 points. There's always been a discussion in the last 4, I think it's been, do we hold or do we go 25? And it's been roughly 50-50 for the last 4 meetings, I think it is. This meeting is going to be the same discussion. Do we go 25 or do we hold? The reason why I think we hold or they hold is because of this inflation number that came out. Global inflation pressures that are decelerating, as we just discussed. They'll still, when they put out their statement, we've kept rates steady, but if there is a move in the next few months, it'll be up, not down. That sort of commentary might come with it. They will express some concern about maybe the labour market being too tight, so Nehru being a long way away from where we are right now. But I think they can just sit tight. The other thing, Mark, which I think we tend to overlook or can overlook, and this is more as much good luck as it is good management, the government's delivered a $20 billion surplus. Now, good luck, I mean, commodity prices were higher and indeed the labour market was stronger. So there's Jim Chalmers, the Treasurer, sitting there raking in the money without doing terribly much, to be honest. But to his credit, and you give him a little bit of credit, he didn't recycle it into the economy. He kept the $20 billion to reduce government debt. Good, I agree with that after 15 years of deficit. But what that means from this perspective, from the economy's perspective, that's $20 billion surplus is $20 billion not in the economy adding to inflation pressures. So we've both got fiscal policy, the budget, the moderate budget surplus, interest rate policy, constraining growth, impacting us. We're hunkering down, cutting our spending, being very cautious and being a bit nervous, consumer sentiment being bad. And that will feed into lower inflation as businesses realise they can't keep putting up their selling prices.
All the right signs are there in terms of money supply.
Indeed. Yes.
All the right signs. By the way, the opposite of what actually created inflation in the first place. Because when inflation was there, it was around the other way.
Just in 20 seconds or less, remember why we got from 2% to 8% inflation at the end of last year. The government, again, it was COVID, so I'm not being critical at all because we didn't know what on earth that COVID meant for society and for the economy. They printed money, hundreds of billions of dollars. They cut rates to zero. This is globally, not just in Australia, but around the world. In fact, the US, I think they spent a couple of $1 trillion. Like, that's a lot of money. I don't even know how many zeros that is. But there was all that money, liquidity, M2. It was flooding around the economy. And for a moment there when we were stuck at home, we couldn't spend it. It didn't show up in the data. But as soon as we got vaccinated, as soon as we got let out of the house, bang, off we went. And then businesses thought, gee, I'm going to put up my selling prices. Supply chain problems meant that we couldn't get these things. So for those lucky people who had an inventory of cars or whatever, they jacked up their prices. And that's where the inflation rate came from. We're in I'd say we're halfway through, maybe a little bit more than halfway through that transition of money being sucked out of the economy. And by the end of this year, certainly by this time next year, we'll probably have these inflation rates around the world sort of close to the targets that the central banks want them. We won't get there overnight, but we're getting there. And the momentum in the last, 6 months has been in the right direction.